Okay, good afternoon, and thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. Today's webinar features Blackrock Silver. Its flagship 100% owned Tonopah West project is one of the best primary silver projects in the hands of a junior in our view. The company is funded, drilling, and expecting lots of news flow while holding an updated resource with over 100 million ounces of silver equivalent and a robust PEA with a post-tax NPV 5% of 326 million US and a 39% IRR. We continue to believe that Blackrock remains a prime takeout candidate given its large, high-grade resource in a world-class mining jurisdiction. Watch for more excellent infill results and some expansion holes in shallower targets at the south end of the resource area as key news flow going forward. The company also has an option to acquire 100% interest in the Silver Cloud project in northern Nevada. Today I have with me on the webinar Andrew Pollard, who's the President and Chief Executive Officer at Blackrock. Good to have you with us, Andrew. The format of today's webinar will be comprised of two parts. In the first part, Andrew will provide an update on Blackrock's activities and give us an outlook on upcoming catalysts. In the second, we'll take your questions live, so please send in your questions using the chat and we'll get to as many as we can. To start, I'll handle the disclosures and then I'll turn it over to Andrew for the presentation. So for Blackrock, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Blackrock specific disclosures. So with that out of the way, I'll turn it over to Andrew to walk you through what you have to look forward to at the company.
Thanks very much, Taylor. It's good to be back with you. You've got the distinction of being the first analyst that launched coverage on us going back 4.5 years ago, right after we made our discovery. And you still have the distinction of being the analyst with my most favorite price target. I think it's north of $1.20. So I certainly appreciate that. And you've paved the way. I mean, in the last 4 years, we've now got 4 analysts covering us. Other ones are going to be jumping in. But most importantly, we've uncovered one hell of a project here. So, you said I might make some forward-looking statements. I certainly will make some forward-looking statements because we're driving this thing forward very aggressively across 4 different key domains this year. And I'm going to be talking about all 4 of those, which I see as being each having unique re-rate opportunities for us moving forward. For those that are just jumping in, we trade under the symbol BRC in Canada. We trade under on the OTCQX under the symbol BKRRF. And let's get going. So as we mentioned, we certainly will be making some forward-looking statements. Running a company, you got to be living both feet in the future because we're driving this forward very quickly. So our main project, Tonopah West, this is a discovery we made 4 years ago. It was the summer of July of 2020, right as the world was opening back during COVID. It was thought to be the consolidation of the unmined extension of the Tonopah Silver District, which this time 100 years ago was known locally as the richest place on earth. And we're the first group to come back in, consolidate multiple parcels of patented claims for the first time and bring drilling to it. And in that time, we've now drilled out 100 million silver equivalent ounces on an inferred basis. It's the highest head grade project of any silver producer globally right now. So we put out a PEA in September. The PEA established, you're in a stopes that average 570 grams per ton silver equivalent as a head grade. So, it's 55% higher head grade than the next closest silver developer in the world right now. And with all the drilling we're doing this year and next, specifically focused on optimizing the early years of production, we think that grade's only going to ratchet up further from here. So because of that grade, it lends itself to some absolutely phenomenal economics. Taylor mentioned them in the intro. But this is going to be something that produces on average about 8.6 million silver equivalent ounces. And for all of our economics in here, our base case was done at $23 silver and $1,900 gold. And at that, those 8.6 million ounces, we're going to be producing at under $12 all in sustaining costs. So, you're looking at an after-tax IRR of just under 40%, roughly a 2-to-1 NPV to CapEx ratio, and a payback period of about 2.3 years. Well, this is a project that's going to work really in any pricing environment. I mean, the base case numbers now seem laughably low, given where gold and silver have gone since. But this is a project that, because of the grade profile, it's going to work in any pricing environment, even at those low numbers, even well below those numbers. But where things get really exciting is once you start factoring some higher prices. And, even for a PEA, we only showed a base case plus 20%. So at 2760 silver and 2280 gold, our IRR shoots up to about 54% after tax. Our NPV goes from 326 million up to about $500 million US. And I mean, if you're looking at current pricing, with silver at $33, $34 and gold, well, French kissing $3,000 here. I mean, this is much closer to $1 billion NPV. And that's without adding a single ounce. Now, the best thing is this project's got expansion potential pretty much in every direction. We've just announced, with all of the drilling we've had underway, that we've stepped out along strike 500 meters, locking in mineralization of this vein corridor with a fence of 4 different drill holes. So it's growing along strike. We're growing it in 3D as well, as we've hit substantial zones of mineralization up dip, outer board of the resource, bringing a whole lot of new tons online through in the early years of production too. And one of the things that's really unique about this project is, obviously, in the mining world, you have to go to some pretty far-flung jurisdictions where you've got a lot of different headaches to deal with. A lot of times the rule of law isn't respected. A lot of times you're not necessarily dealing with governments, but you're dealing with cartels. There's not a single CEO in the world that, if they could wave their magic wand and uplift their project, that wouldn't put it in Nevada. But what makes our project even more unique is the fact that our project's entirely on patented mining claims, meaning private land in Nevada. This allows us to drive this thing forward through permitting quicker and cheaper than just about any other setup you could possibly have in mining. Not only, we only had our discovery hole in 2020. Here we are in 2025. We're already focused on getting this thing permitted. Everything we're doing on the ground right now in terms of our drilling is to put us in a position to be able to go underground in 2027. We'll have gone from first drill hole to test mining within the span of 7 to 8 years, which is unheard of. Not only are we now a developer on the back of the last PEA, but we should be seen as a near-term opportunity, certainly the next near-term opportunity to come online in America, that's for sure. So this is the unmined extension of the Queen of the Silver camps, the Tonopah Silver District. It's the second largest historic silver producer in the silver state of Nevada. It's known as the Silver State because of this project. And in terms of historic production, it's second to only the Comstock lode when it comes to silver, which just slightly edged it out. The difference between this and the Comstock, though, is the silver ratio here. Much, much higher silver to gold ratio here than anything else in Nevada, including the Comstock. So Tonopah itself was discovered in 1900. One of the most consequential discoveries in Nevada mining history, in the sense that it was, between the 1860s and the 1890s, the Comstock was the main economic driver in Nevada and in America for that sense within the mining world. But by the mid-1890s, the Comstock had petered out. 2/3 of Nevada's population had left, chasing riches elsewhere, and it was only cattle miners and First Nations that remained. And in 1900, it was a cattle miner named Jim Butler who came across a big outcropping vein at surface, which was the origins of the original Tonopah Silver District discovery. That led to the last real big gold rush prior to World War I. It led to a huge amount of follow-on discoveries in the Walker Lane surrounding Tonopah. And for a period of about 30 to 40 years, Tonopah was, the center of all activity in Nevada. I mean, it was truly, truly consequential for Nevada's vibrancy, and it led to a huge population boom. So over, a span of about 30 years, Tonopah produced roughly 400 million silver equivalent ounces. Following in the Comstock's footsteps, Tonopah in the early 1900s was seen as the richest place on earth. All of that production, 174 million ounces of silver and 1.8 million ounces of gold, all of that came from just 7.5 million tons of material, meaning super, super high grade ore. And the metallurgy there was phenomenal. All of that production came from stamp mills, some of which were on our property and subsequently burned down. But the old timers, even back then, because of the metallurgy, didn't leave much meat on the bone whatsoever. So, we consolidated this. We quickly said that, if we're right, the old timers didn't stop mining here because they ran out of gold and silver. They stopped mining due to some technical issues of the day, primarily the reliability of electricity and the onset of the Great Depression and the banning of gold and silver mining through World War I. And we've proven that concept now. Wrapping up everything we've done up until last year into an economic analysis, we're showing something that's got an 8-year mine life, producing 8.6 million silver equivalent ounces every year at what's projected to be either the lowest or among the lowest cash costs globally of any operating silver mine in the world. If you want to break down our production just on an annual basis, each year it had averaged between 4 to 6 million ounces of silver and between 55 to 70,000 or so ounces of gold. Now, because our grades are so phenomenal, just our head grade of 570, that's broken down between silver at 271 grams per ton and our gold head grade of 3.34 grams per ton. Both our silver and our gold grades alone are above the cutoff, meaning if you want to look at using byproducts as a credit, you'd be producing one of them at negative cash cost. For example, if I just using the base case numbers of $23 silver and $1,900 gold, if I use gold as our byproduct credit, we'd be producing silver at negative 22 cents for every ounce. So effectively, one of them pays the bills, more than pays the bills, and the other you get a free ride on. Now, the good thing, though, is that, when gold runs, silver tends to follow and vice versa. So either way, you're looking at a very, very robust operation. This is going to be a conventional underground mine, very small footprint. You're not moving a lot of tons, but, each ounce packs a huge, huge punch when it comes to margin. When it comes to domestic production, America only produced 32 million ounces of silver last year. So our contribution of between 4 to 6 million ounces every year is going to be a huge driver of growth for them. 12 to 15% increase to their domestic silver production each and every year. Very, very straightforward underground mining operation. Aside from the grades that we have and the metallurgy, another huge positive we have is the geometry of the deposit. Laid out in our PEA, you'll see that about 77% of the stopes are going to be done, of the mining is going to be done via long hole, with the remainder cut and fill. So very, very straightforward, conventional underground mining methods. We've taken a very conservative approach in terms of how we constrain it. We're not looking at any exotic mining methods that always look good on paper but never tend to work out in real life, like Rasu mining, for example. This is just very meat and potatoes, straightforward operation. We're one of the only silver projects globally that will be able to be a doré at site. You just effectively crush the rock through a 2-stage crushing circuit, run it through the Merrill Crowe, and once or twice a week the Brinks truck comes. They get their gold and silver, we get our check. So in terms of production profile, this one slide here lays out how our production profile and our cash costs compare with every single large operating mine in the world based off their 2023 numbers. What you'll see is that, at our production profile, if I can do this, very, very comparable to Santa Elena, which was the original Silvercrest, and then Las Chispas, which is Silvercrest 2.0, both of which got bought out at huge premiums. Now, our project, in terms of anything else out there, is most like Las Chispas, which just got taken out for about $2.4 billion, I think is what it worked out to. Now, when I say it's very similar head grades, and what makes our project also unique and comparable to that is the fact that it's just silver and gold that's in our silver equivalents. We're not hitting any base metals. Why is that important? Because it makes processing very, very straightforward. We don't have to have any flotation cells in our circuit. We don't have to get smelters involved for refining. This is just you crush it, you run it through a Merrill, which means that it lends itself to less hands to feed along the way. So cheap processing costs. In terms of domestic production on a silver equivalent basis, this would be in the top 3 on a silver equivalent. If you look at just pure silver production, it would be top 5 in America. And our ability to fast track this is something that should really stand out. I think that what you'll see is that, right now we're trading as if we're still a middle of the run Exportco. We're going to be having development permits in hand within the span of the next, couple of years and going underground. And the big thing with us is, once we get permits to go underground, we'll be looking at test mining and bulk sampling 100,000 tons of material. Now, when we're talking about mining material like that, our early years of production is laid out in our initial PEA, the initial years of production. You're in a stope that's 981 grams per ton silver equivalent. So our ability to go underground and start test mining and bulk sampling 100,000 tons of material in a stope that's just a little under a kilogram per ton silver equivalent. Not many companies seek to make money during test mining, but that's because not many companies are mining something that's a kilogram per ton. So, that's something that's going to really fast track this towards a construction decision. And really, the rubber's going to hit the road over the next year and a half. In terms of our valuation right now, though, what you'll see here is, currently, and this is as of yesterday, we're trading at about 0.22 PNAV, whereas other PEA stage projects like these are commanding 0.63. There's a big disparity right now, and I'm going to show how, we're undervalued based off of a few different metrics. But, that being said, I think the market is starting to take note of what we're doing, and that's evidenced by massive increase in our volume. Ever since we put our PEA out in September, we've seen a huge surge in volume. If you were to look at just year to date, January to March now, we're up 125% in terms of dollar volume traded as compared to the same period last year. So people are starting to take notice of this. And I think as we address really 4 key issues on the back end, and those key deliverables. One is delivery of a resource estimate in September that will finally give us an M&I credit. Right now, we're the only developer listed on here that is 100% inferred. So by getting a substantial M&I credit, which is that drilling's wrapping up within the next few weeks here, that should help, I guess, with the re-rate on that front. Also, our expansion program that we've got underway right now, where we're showing our mine life has huge potential to increase rather substantially. And we've confirmed that potential with just our last set of results we put out recently. That's going to be another big re-rate when we come out with our expansion resource estimate sometime around January of next year. And all of that drilling that we've done, both our M&I resource and our expansion resource, will be rolled into new economics by, say, PDAC of next year. And last but not least, our other re-rates that we see it as being permit ready to go underground. And that's going to really, I think, put a big target on our back. So the next 2 years, the golden path is laid out right here. As I said, we between July and December of last year, we completed about 20,000 meters of drilling. We've got another 15,000 meters or so that we'll have completed this year, which will wrap up this aspect of the program some point between now and the end of May. All of that drilling that we've done thus far will be incorporated into a resource that we'll have out by Beaver Creek of this year. But that one's largely going to be focused on just optimizing the first few years of the production. So we're drilling out on 25-meter centers through years 1 to potentially 3 of the mining operation, really optimizing those ounces up front. And then we've also got our expansion resource, which should be coming through in January of next year. Now, in addition, as I said, we're getting our heads wrapped around our permitting right now. We've started data collection. We think, based off how things are looking, we'll be in a position to make our full submission to regulators by the summer of next year. So everything we're doing all the environmental data collection we need right now to get this permitted, concurrently with all the optimization we need to get done, that'll allow us to really craft our design engineering for our permit submission for the summer of next year. And then we expect to be in a position to be going underground by the end of 2027, where we'll be able to start drilling with an aim of doing some test mining by 2028. Now, there is one big thing which could see us shave about a year off of this process, and that's through the water quality monitoring we're doing right now. And that is simply, we think there's a good possibility that our initial test mining area falls above the water table. And if that's correct, it will shave off 9 to 12 months off of this timeline here, meaning there is decent potential, and we'll know over the coming quarter or two our ability to potentially even go underground by the end of next year, which would be huge. Most companies end up in permitting purgatory. It's the reason for the Lassonde curve and investors tending to lose interest for developers. With us, our Lassonde curve is going to be compressed significantly, simply because, well, we're still adding a lot of ounces, and concurrently we're going to be permit ready very, very quickly. So, this is going to be driven forward quicker than just about any other project in the industry. And I think that's going to put a big target on our back as we de-risk, optimize, and get this thing shovel ready over the coming quarters. But, we've got 3 different studies planned plus permits. And we've got a whole lot of drilling in front of us. So it's going to be one hell of a year. So this is Tonopah today. As I was telling you, back in the, early 1900s, this was the center of Nevada. That Mizpah Hotel there was the tallest building in Nevada up until the 1940s. It's been, Tonopah's actually seen a bit of a resurgence just in the last decade or so, with the Mizpah Hotel and the Belvada Hotel across the street, two hotels that have been there since the early 1900s, seen complete rehabilitations. The Mizpah Hotel to this day is seen as the #1 haunted hotel in America. The history, if you go on Amazon, there are countless books, fact and fiction, about Tonopah and what it was like in the early 1900s. But a lot of very interesting characters came through there back in the day, including, even at the Mizpah Hotel, Jack Dempsey was one of the original doormans there. Wyatt Earp, in fact, once was deputy sheriff back on the property. And this is exactly what this Tonopah looked like the year it was discovered. So, today it looks like a charming, historic mining boomtown. But back then, Tonopah was one of, because of the time it was discovered, it was one of the most advanced mining camps globally in the world. And, truly discovered in 1900 in the era of horse and buggy. But it was also at a very, very interesting moment in time, because what should stand out on this is there's power lines. So you've got horse and buggy, but you've also got these power lines there. And Tonopah was one of the most advanced mining camps of its day, simply because it was the first real mining camp to utilize electricity in their operations. It was the first to use electric underground trams. It was the first to use electric pulleys in their hoist houses for their shafts. And it was the first to really use electric water pumps to pump out the water when they got below the water table. And it was that reliance on electricity that, one, made it so unique and modern for its day, but it also ended up sinking the district, because back then, if I can stop this, stop the whiteboard. Okay, so Tonopah itself, the original discovery that Jim Butler made with his trusty mule, was made from outcropping veins where the town of Tonopah is today. Big outcropping veins there, and it was thought to be an east-west vein corridor. So after he made his discovery and started leasing out some of the claims he staked to some smaller scale miners, they realized this thing's going to be heavy duty. And they realized that, they did no drilling back in those days. They just followed the veins underground, and Tonopah itself was thought to be an east-west vein corridor. So effectively, in the mid-1910s, a company called the Tonopah Extension Mining Company, which was a super well-backed operation. They had George Wingfield, who was the richest guy in Nevada of that day, was one of their largest shareholders, and a guy by the name of Charles Schwab, who happened to be the CEO of U.S. Steel, one of the largest companies in America back then. They were their main shareholders, and they decided to skate to where the puck was going. So in the mid-1910s, they started gobbling up all of the claims they could on the west side of town. If you look at this map here, this is what the district looked like in 1912, and every different color represents a different mining company. So they consolidated what they saw as they skated to where the puck was going. They knew ultimately over time production would get to their side of the property. And when it did, which would have been around the early 1920s, they were in business. This area here, which we now call Victor, was the last operating mine in the district. And at Victor, they mined it down to the 1880 level. So they were nearly 2,000 feet below surface. And what was very interesting about Victor was that as they went deeper and deeper, the vein kept blowing out. It kept expanding. But as they got to the 1880 level, it was around 1923, 1924, they got below the water table and they flooded it out. And, because the electricity, the whole camp was relying on it, they decided to use electric water pumps. It was about 2,000 gallons per minute back then. Not much by today's standards, and not much back then either. But the issue was the reliability of electricity, and it was a big job. And oftentimes they turned the water pumps on, and then the lights throughout all of Tonopah would go out. It would cause blackouts across the entire town and district. So that wasn't necessarily ideal. So, the Tonopah Extension Mining Company, they were, this was a big company by that point. They scoped out years and years more mine life. So Charles Schwab said that, okay, well, listen, I'll give you guys debt. You built heavy duty diesel generators and big water pumps to be built in my foundries over in Europe. And then, you pay me back once they're installed. And it took about 4 years for that to happen. So the generators and pumps weren't built and shipped over until about 1928, 1929, right as the Great Depression was emerging. Because the Tonopah Extension Mining Company wasn't mining over that time, metals prices started tanking. Silver was $1 an ounce in the early 1920s. It fell to about 25 cents an ounce by 1930. Schwab saw the writing on the wall. He decided to tell everyone what a great story the Extension Mining Company was as he blew out all the shares in San Francisco and Philadelphia. And then because they couldn't pay back the note once the pumps were installed, he sent the company into Chapter 11. That company is this purple claim block here. Now, turns out the Tonopah Extension Mining Company absolutely nailed their consolidation. The good people at this office, which still stands to this day, they did find the extension of what was the richest place back on earth. But we're the first group to come in and get our hands on this. We picked it up off of the heirs of the individual who purchased it out of Chapter 11 in 1930. I believe he purchased it for $650,000 in 1930. Our first drill hole, we told the market that if we're correct, where they stopped mining, the vein was said to be 24 meters thick. If we're correct and they truly didn't stop mining because they ran out of gold and silver, we'd hit something like that. We ended up hitting about 30 meters of a kilogram per ton silver equivalent, in addition to a series of stack veins on top of it. And since then, we've now drilled out 4 kilometers of cohesive, intact vein corridor right from where the old timers did all of that historic production. And this thing's going to keep going. So, we've had a very, very ambitious drill program since July of last year, where we're just de-risking, increasing confidence of the 100 million ounces we've got already. And really, in terms of expansion, it's a paint-by-numbers approach to filling in the gaps here. We think there's going to be a significant amount of not only ounces, but mine life we're going to be able to add here very shortly. Now, just on this slide, it's very easy to sort of lay out how this thing is going to grow. So the red and gray areas represent our 100 million ounces. So what you'll see is this area up here, this is Victor. This central area here is known as DPB. Now, when they were waiting for those generators and water pumps to be built and installed, the extension company, they were underground, so they drifted across, I think at the maybe 1200 level, and that's where they encountered these series of veins here, but they never got around to mining it. So Victor, you've got the central area DPB, which the old timers truly served up to us on a silver platter with the initial layout of where the first workings were there. And then we've got a 12 million ounce deposit out here, which we call Northwest Step Out. Now, for the purposes of our PEA, we actually orphaned this 12 million ounce deposit out here from our mine plan. So our mine plan only includes the Victor area and the Victor area and the DPB area. All this upside, including this 12 million ounce deposit along strike, that's what we're going after this year. We just announced through our expansion drilling, we've got 1 kilometer gap that's separating this zone and this zone. We've just announced that we've got, in a series of 4 different drill holes, have hit a series of veins exactly as we modeled, expanding this area of mineralization now and closing this gap to 500 meters remaining, of which we're going to hit again towards the end of this year on the drills. This isn't 3 separate deposits. What needs to be impressed upon you is this isn't 3 separate standalone systems. This is one big underground mine, and all we're doing is filling the gaps. Now, also, to help orient you as well, in terms of how the mine plan is going to look, effectively, the center of gravity for us, the decline to access everything, is going to start right around this area right here. And it's the early years of mining are focused on these 2 veins here. It's the 2 veins known as Merton and Bermuda. The reason it's going to start there is because this happens to be the shallowest portion of the property. The veins project closer to surface, and they tend to get deeper as you go. Certainly at Victor's, that's the deepest portion of our property. The plumbing on that's deep. One of the reasons it's also the deepest is because they already mined out the top of it, but this thing's going to grow in 3D as well. So in terms of the drilling that we're going to be doing, that we've done. This is a new slide in the sense that it shows all the drilling that we've done last year, and it shows all the drilling that we've got laid out for this year before we wrap up this phase of our program and start our modeling in anticipation of our resource in September. Now, what you see is really our focus this year is two-pronged. If you look at our PEA, we want to address, I guess the two things are, there's a 2.3-year payback period. So our focus is on de-risking our ounces with about 2 to 3 years worth of production drilled out to M&I standards. The other aspect is we've got an 8-year mine life. We think with the drilling we're doing now, we can take it well beyond 10 years. And that's actually the potential is substantially more. If we're correct, we think we've got the potential to add about 30 to 50% more high-grade new tons into our resource. So, there's a decent upside projection there. But beyond that, we'll be able to bridge the gap to that orphan 12 million ounce deposit out here, meaning additional mine life. Every single ounce that we're drilling from an expansion point of view bolts on to our existing mine plan. So the drilling that we're doing in this area, this is our M&I conversion drilling. That's where we're going to be drilling out the first 3 years, 2 to 3 years or so of production. Now, when it comes to our PEA, and I guess the resource of which the PEA is based off of, our PEA and resource start from 200 meters below surface. Well, an interesting thing has happened with all of the drilling that we've done on our M&I conversion program. That is, we've been chasing mineralization up dip. We've been hitting ultra high grade zones of mineralization from about 130 meters downhole as opposed to 200 meters downhole. So we're adding, not only is our expansion drilling backfilling mine life at the back end, adding ounces in mine life from years 8 to potentially 12 or 13. That's all well and good, but we're front loading mine life here as well by drilling out near surface mineralization, cutting the distance to surface by about 50% from our last PEA to where we think this new resource will go. So we're bringing a lot of high grade tons up dip, which will have a huge lever on our economics when it comes to, well, hopefully our payback period for certain. But adding ultra high grade tons up front, will certainly have a huge positive consequence for everything we're doing from an economic profile. So in terms of how everything works in the 3D point of view, and I can sort of demonstrate here as well what the drilling means for us. So now the M&I program that we're doing right now is focused on these two zones right here, these two stopes. Now, as a function of our M&I drilling, we've been hitting mineralization, effectively cutting this gap in half from surface. Really, really high grade tons. Now we're tying into some really, really good thick high grade shoots. In fact, in terms of our high grade zones, they're coming in quite a bit thicker than previously envisioned. And we're also, so not only are we gaining confidence and validating our model with our infill drilling, but we've also established a whole lot of new tonnage potential up dip, which should be very beneficial. In addition, all the expansion drilling we've done to the west. Now, this thing's going to grow along strike, and it's going to grow in 3D as well. This is that Victor area that the old timers mined out historically down to this level. Now, drilling Victor from surface, I think in our last resource, we've got about 47 million silver equivalent ounces there, somewhere in that range. We can't drill it any deeper from surface because there's multiple levels of workings that we sort of have to navigate from. But really, once we can get underground, this thing, we're nowhere near the bottom. We're not hitting, we're still just encountering gold and silver. We're not seeing any base metals in what we're drilling. So not only is it going to grow out along strike as we connect the dots and infill the gaps and bring it up to surface too, but this thing, once we're underground, this thing's going to grow in 3 dimensions. From a surface point of view, very, very straightforward operation. The nice thing about Tonopah, is the sense that, we can drill this project 12 months of the year. There's no base camps required. This little line here, this is US Highway 95. It connects Vegas and Reno. Tonopah represents about the halfway point. The town of Tonopah is situated where it is because that's where the original mining activity took place. But where our decline entrance is and where our mill and process plant is, that's about I guess 3 to 4 kilometers away from the town of Tonopah. What you'll see here is that there's really nothing at surface other than what's beyond the highway. So we don't really have to build anything. In Tonopah, there's probably 10 to 15 hotels and motels. There's power for drilling. We connect to fire hydrants to get our water. This is the closest thing to Val-d'Or as you could possibly have, in the sense that you're just right next to this town. And in terms of permitting this, as I said, everything we're doing this year and next year should allow us to be underground by the end of 2027 at the latest, and potentially 2026 if our water monitoring goes the way we think it will in terms of permitting our initial decline. Now, in terms of how the PEA is lining up from a production point of view, because our highest grade stopes are actually in the early years, that Merton and Bermuda vein, as I was telling you, if you look at our PEA, you're in a stope that's 981 grams per ton silver equivalent. This is, it lends itself to really, really robust numbers effectively right off the bat. So what you'll see is year 2 is our biggest production year with 67,000 ounces of gold and over 5 million ounces of silver. With the drilling that we're doing, bringing mineralization up dip and closer to surface, there's potential that we'll be able to bring some production up front into year -1, potentially, if all comes together. But what you should see is, this thing's going to be spitting out a whole lot of free cash flow effectively right off the bat here, and it's going to, and that's, these numbers are based off of that $1,900 gold level. When I say that there's really nothing else like this amongst the silver developers, one, that's because there's just not that many silver developers out there. It's a very, unlike gold where, there's countless projects and, you can separate them out by geography just to narrow down the list. This list right here is every single development stage project in the industry right now. Now, in mining, they say grade is king, and that's where, we really stand out. This is, of all the projects, there's only 3 underground projects. So there's only 3 underground peers that we can compare ourselves to. You've got Vizsla, and then you've got Southern Silver. Now, when you look at head grade, so head grade's the grade you're actually mining at in the stopes, our head grade average is 570. The other undergrounds average 257 and 372. Grade is king once again, and that's the only difference I see between these economic profile and our next. I think our average grade is going to ratchet up significantly between now and then with the M&I drilling that we've done. So, we're the only domestic project in America that can be permitted quickly, where we're likely the next American silver producer. Just gold and silver means easier, cheaper metallurgy, processing costs, and then the grade profile. This thing's got everything. And in terms of valuation right now, this slide here is every large silver advanced exploration or development company based off of presented resource grade. There's a difference between resource grade and head grade. Head grade's more constrained. And what you'll see is this is every single project in the industry that's 90 million ounces or above. Now, when it comes to silver, high-grade stories, there's really only 3. There's Dolly, there's Blackrock, and there's Vizsla. And on an EV ounce in the ground basis right now, we're trading at about a 50% discount on them compared to the really 2 only other high-grade peers out there. Now, why is that? One is we're the only story listed on here that's 100% inferred. We're going to have an M&I resource out here that I think will blow every other number out of the water and really, really capture some attention. The other is, there's only 2 new discoveries on here, us and Vizsla, and ours is a little harder to understand. So I think the market's finally wrapping their heads around the economic potential. And the other thing is, permitted ounces are worth a hell of a lot more than unpermitted ones. Well, we're driving forward permitting aggressively, and we'll have those in hands too. Right now, we're the best buy in the industry based off of as high grade stories go. With that, we just completed a financing in January that was led by Raymond James. As I was mentioning, year to date, I guess from this point last year, we're up about 35% on a share price point of view. On a volume point of view, we're up over 125%. We're trading about 10% of our float every month, and we've seen some huge buyers come in along the way. Last year we raised $20 million. Eric Sprott was kind enough to give us half of that, but a lot of new institutions have come in and established positions over this time, and we're seeing that in the volume. So we're well positioned to do everything we want to do this year in terms of all the deliveries, in terms of the resource updates, in terms of the PEA, in terms of our geotechnical drilling, our water quality monitoring, our air quality modeling. This is something that we've got nothing but catalysts to look forward to. Even in terms of what's in the assay labs right now, we've got 2 rigs at site going 24/7. We've completed 23 drill holes so far this year. We'll be drilling through likely the end of May. So there's going to be just assays coming down consistently over the coming weeks and months, all leading towards that resource update in September. Analysts are jumping in. As I mentioned, Taylor and Red Cloud were the first to plant their flag. Research Capital and Ventum have been with us for a long time. Raymond James made us their number 1 pick in the silver industry. They said their last coverage said Silvercrest is gone by Blackrock. So we're cashed up. We got a lot of different re-rates. And with that, I think we're happy to take some questions.
Perfect. Great presentation, Andrew. So lots of questions have come in already, but if you do have questions from the audience, just type them into the chat and we'll get to them in due course. So maybe the first one, since we got this slide up, we'll go to is, the current cash position is obviously, you did your financing recently. So what's the cash position and where does that take you going forward?
Well, so we'll have our Q1 financials out. I think at the end of next week. They're due by the end of March. We put out our year-end financials. Our year ends October 31st, so we put those out last month. Subsequent to year end in Q1, we did a $13.8 million bought deal, and we still had a lot of money. Well, not a lot of money, but we still had quite a few $1 million left over as well. So from a cash position, there's never been a time where we've had more money than we've had over the last few months. But there's also never been a time where we can deploy it and see a clear ROI in terms of what we can do to advance the project and advance the market's understanding. So for an exact figure, wait till next week. But certainly we've got more than that 13.8 million listed there. That's just the financing we closed a few weeks ago. But the drills are very hungry. Permitting, we've laid out about $3.5 million to get that accomplished. But it's the project's going to grow across multiple domains this year, and as long as we've got good ways to invest the money, we'll keep deploying that capital into the project.
Great. Okay. Another question here: has the company been subject to naked short selling in the past? And is the recent agreement for market making services anything to do with combating the naked short selling?
Well, the thing about naked short selling is it's really hard to tell because, certainly, there's a lot of games that can be played. I mean, even, I read somewhere that something like 80% of all TSX venture volume is done through algorithm tradings. It's not people manually typing in trades. It's these high frequency traders that, tend to drive buying or selling either way, and they tend to have some games there. We did just after 5 years engage our first market maker. Really, that's to, in a way, it's going to do two things. One, it does combat some of the games that the algorithms can play. Like sometimes I know a lot of shareholders, and I've noticed as well, you'll see odd lots, very small lots, try and sell you down at the end of the day, or you'll see some big disparities, or some games just between the bid and the ask. There's something called dark markets too, which were hidden offerings on the ask and on the bid, which aren't even public knowledge. But so one is we're getting intelligence on who is buying and selling the stock each and every day. So sort of anyone trying to play games with it are on notice. We've got a much better view of where blocks are coming from, so we can actually get ahead of that. And if we do see any large holders, offloading something, we can actually approach them and say, hey, I noticed you're doing this. And the other thing is there is some algorithm, the market maker, they've got their own algorithm to try and just level the playing fields a little bit so that there's less games played on. From short perspective, every company is subject to shorting, and some's harder to track down than others, but hopefully this will help mitigate some of that too.
Perfect. Okay. I have a question here just on the permitting side. Can any of the AI abilities be used to reduce costs or speed up preparation with respect to paperwork that needs to be submitted for the various licenses and environmental related submissions?
By the time everything we're doing, the water quality, the air quality, flora and fauna surveys, all of that is being done concurrently with our drilling. One of the reasons why we're breaking out two separate resources this year and doing an M&I focus one first is because the M&I focus, the M&I area that we're drilling out, that's effectively the basis for our submission to the regulators. That's where we really, really want to take the time, optimize and refine the design engineering up front. So while we're able to keep drilling out the expansion zones thereafter. But, by finishing off our M&I program in the next month, we'll be able to get into modeling over the summer. We'll be able to get the engineers in there over the summer too. And by the time we get our water monitoring and our air quality permits in order, our waste rock characterization is another big one as well, which we're going to be doing over the summer to show what's going to be going on the stockpile and the waste dumps. All of that is sort of happening concurrently, where we can't make our submission until we know exactly what the submission is going to be. So that's the design engineering aspect of it. The waste rock characterization, the air quality, those are just, it's like a countdown clock. You just have to do things over a certain amount of quarters. We're doing that. And with the water monitoring, as I said, we think there's good potential that our test mining area, our bulk sample area, the permitting of our initial decline might actually fall above the water table. So we might even not have to worry about that one in general. But everything's being driven forward concurrently. We're hiring. We've engaged external consultants. We're hiring internal permitting representatives, but it's going as quick as humanly possible.
Perfect. Okay. And then I guess kind of related to all that is just a question about the strategy going forward. Is it your strategy to build the mine yourselves, or to look for a partner to come in, or just look to sell outright?
We've got a pretty clear opportunity laid out. I mean, the next 2 years is laid out on a silver platter, and it's not going to cost a whole heck of a lot for us to, one, connect all the dots, add a lot of ounces, add a lot of mine life, get the permits in hand, and even the initial test mining. I mean, listen, we're the investment to go underground for that is quite a bit limited. It's not the full CapEx for sure, but with that, we'll be able to be test mining something, 100,000 ounces at those grade profiles. I expect our valuation to start mirroring how some of our peers are trading very, very quickly. And if that does it, we'll be prepared to do it ourselves. I mean, every Silvercrest, everyone thought they were going to get bought out along the way, and it turned out, and I mean, that's a world-class textbook example of how to do everything sort of the right way in terms of building it. But they had to build it themselves, and they had to they ended up getting taken out in their second year of commercial production. Well, we've got the team. We're growing the team. We've got an ability to permit this quickly. We've got an ability to add ounces. We've got an ability to get underground, do that all ourselves, and get the right contractors in place to do it. If we have to, we have to. But someone's going to have to pay a lot of money to get it. So we're trying to add as much value in our share price as we can, as quickly and cheaply as possible. And as I said, 3 different studies and permits in the next 12 to 18 months. I think our valuation is going to pick up steam, and as our valuation picks up steam, so too does our ability to actually look at advancing this ourselves. So you have to act as if, but this is something that I think every single silver company in the world would want to have, and a lot of gold companies too.
Yeah, for sure. Okay, I think we're kind of through most of the questions on Tonopah. Maybe just as we're coming up on the hour here, we have 2 that are just wondering about the first one in regards to Silver Cloud. How do you plan to unlock value in that project? And then I'll group in another question, just wondering about any plans to monetize the lithium aspects or assets.
Yeah, well, as it stands, we're undervalued based off of one discovery. We've got a very clear ROI proposition with Tonopah West. We've got a very, our model in terms of drilling is predictive. It's validated. It costs a lot of money to advance and de-risk a project, but with that, there's light at the end of the tunnel. For us, our focus this year is squarely on advancing Tonopah West, certainly through their next economic study, but also through permitting. But that does leave Silver Cloud. And Silver Cloud, that's the reason why I'm here and why our team is here originally. That was the basis. That was the asset that got Blackrock all started. That's a nice poker chip for us. It's it's on the highest grade gold belt in Nevada. And we're the donut hole in the middle between 2 of Hecla Mining's operations, Midas and Hollister. That's something that, if we ever sort of end up where we're waiting for something or we need something to do, we can always hit it with the drills. It also, given its proximity and given its huge land package and high grades, we hit 70 grams gold up there. It's a poker chip for us to play with, whether, we might look at a spin out or whether we might look at teaming up with other companies with mills and assets up there that might want to do something. So right this year our focus is on getting our valuation to reflect what we've got intrinsically at Tonopah. I think we're going to do that. And then Silver Cloud, that's something we keep in our back pocket. The holding costs on that are next to nothing. It makes us a better takeout target too, just given a strategic location. And in terms of our lithium discovery, we've got a lot of drilling in that. Our partners were able to drill out a big blanket of mineralization starting right at surface, but the only issue is lithium markets just completely down in the dumps. So we've got our entire land package down there. It's 20 square kilometers of BLM claims. If the market starts showing some signs of life, we might be able to put out our own lithium resource on there. But for now, we're just sort of seeing what happens with the market and waiting for. There's no point doing deals at the bottom of a market with anyone. We're not, we've got a very clear value proposition with our gold and silver. I don't need to chase other commodities.
Perfect. Okay. So we are coming up on the hour there, and I think we got through all the questions that came in. So we'll wrap things up. I would like to thank Andrew from Blackrock for taking the time today to host the webinar with Red Cloud Securities, and thank you very much for everybody for tuning in today.
Thank you very much. Actually, one quick thing I'll mention is on April 12th down in Tonopah, we'll be having an investor day. So if anyone that's in Nevada wants to come, or if anyone wants to be in Nevada, send an email to info@blackrocksilver.com. We're just figuring out numbers now, but we'll be doing a large site visit down there. We'll probably have a few different tours that day. Check out the Tonopah Mining Park. You can see some of those hotels I showed you as well, but it's a very, very cool Full opportunity for investors to see firsthand everything we're doing on the ground, and really, this district's place in history and its path forward. There's more chapters to be written in this in the book of Tonopah. So
perfect. Yeah, I can definitely attest to the quality of the visit, and that would be good for anybody who's down there to check it out.
Awesome. Okay, well, it's a pleasure being here. For those that were tuning in live, I appreciate it. I know I was going up against Jay Powell, so my mother's going to be very proud that I was able to command any audience. So that's good. Thank you very much.
Thanks, Andrew.